Wow, let me tell you something about what's going on here at Revere. So, one, it's new jean season. So I am breaking in. Look at Daniel, like new
New
jeans.
jean, I'm trying to figure out.
New jean, like new blue jeans. I've got new
I
blue
thought
jeans
that was
on.
some like acne medicine you
No.
were using. New jean.
New jeans. No,
Like
it's
Nalgene.
it's
Yeah,
new
right.
blue jean season.
I got it.
So I'm breaking in a new pair of blue jeans. Well, let me tell you
Are
something.
they Huskies?
Well, that was the thing I was thinking about. Like, I look really good in these blue jeans. I like what they're doing to my buttocks. And here's the thing. Then I thought about Alex. And so I was like, here's the thing about me breaking in a new pair of blue jeans, looking good, by the way. And someone as sculpted as Alex. And I had this analogy as I was staring at myself in the mirror. See, with Alex, you know what you're getting. I'm not sure he's going to get any better looking than what he is. But when you strap on a pair of Husky jeans like I did today, it could get better. See, it's all about potential in America. That's like why the IPO, like where could this IPO go? Where could this SPAC go? It's like a new issued stock. With Alex, like are his arms really going to get any bigger? Is he going to get any more handsome? Probably not.
It's hard to say.
But with a Husky,
What do you want?
right, like with a Husky fella like me, it's like, well, wait a minute. He could fit into many roles here. He could get thinner for this role. He could balloon up like a great actor would when filming like the like another role where you eat a lot.
Sure.
Like Husky allows expansion of oneself, whereas Alex is one dimensional. And that's how I left. And that's
Hold on. Wait a second. Hollywood loves the typecast bad guys. All right. They're all about that stuff. Big guns, I mean, they make the money. Dwayne Johnson makes more money than anybody else in Hollywood right now.
But you know what you're getting? Like Dwayne Johnson doesn't change his look.
That's true.
Like he's not going to be,
because
I mean, he's either Fast and Furious or he's in some Disney movie on a boat captain.
yeah, but he doesn't need a gimmick, right? He's got the muscles. That's his thing.
Now Jack Black.
Now
That
Jack Black.
body shape could do a lot of different things.
It's been
Is that the
same.
ambassador for Husky jeans, Jack Black?
Could be.
Should be.
Could be, should be.
Would be.
You know who got unfunny as he got more fit? Ben Stiller.
Oh yeah.
And I'd argue Joe Piscopo if you're from the 80s. Like when you get the muscles and you start getting featured in Muscle and Fitness, I think the funny leaves you.
I had the best example of this. Val Kilmer,
Oh no.
when he was in Top Gun, was like ripped up. And have you seen him now?
Okay. Well.
No. Oh, by the way, I have not seen Val Kilmer now, but which brings not Jean-Claude Van Damme. Who's the guy who does karate?
Jackie Chan.
No, not Jackie Chan. He's American. He's got the ponytail, but he is big. He started like a cryptocurrency. Like he's all over the map. Come on.
Oh,
Action star.
I think he's in the pictures next door at the Daily News.
Yes. His picture
A
is
keto. He did a keto in Japan.
come on, Hunter.
Oh, come on.
I have no idea.
Oh my gosh, karate!
Yeah.
Don't make me Google on screen.
Married the brunette. Oh gosh.
Oh, come on, Don. I know you know this.
I thought Steven
I'm
Steven
not
Seagal!
surprised.
Steven Seagal!
Okay,
Steven
there
Seagal. Alex jumping in here.
Wow.
Good as he's going to get looking, Alex Katutis jumping in there with
Coming
the
in
Steven Seagal.
Steven Seagal.
Yeah, Steven Seagal does not look like. Is he in like Red Dawn or Red Hunt for Red October? What movies is Steven Seagal in? Or am I thinking of Sean Connery?
No. Red October was Sean Connery.
Steven Seagal is like he got busted for doing some kind of crypto coin, like Seagal
Really?
coin or something. Oh yeah, it's all over. So anyway, new jean season, Danny. And so to welcome in the 45-degree weather here in Dallas, which I have been waiting for this is my season. We'll get 2 weeks of it and then it's gone.
Open windows in the house.
Oh my gosh.
Yeah.
Love it. It's
Oh,
raining. It feels
best.
like fall.
Yeah.
Finally.
We only get a week of it in Texas, so enjoy.
Yeah. So literally my first note on
Love it. Leaves in the pool.
Yes.
Oh my God.
if anyone ever goes through my diary of notes, like I keep all my books of notes, right? Well, no, I think actually I started throwing a couple of them away. I'm like, this is trash. This probably will end up in the trash too, but my diary of notes literally says, talk about new jean season. That's literally the first. That's on my note sheet. So listen, the other thing that popped on my note sheet, have you guys ever seen, let me see if it's here. Danny, are you an aficionado of The Simpsons? It was election day.
No.
So we're taping the show early. It's Fed Day, folks. Stock nerds and market lovers. Welcome to the show.
That day before the report.
Yeah. Let me get my manners here under control here. Welcome to the show, Stock nerds and market lovers, where We have a little fun in the Cathedral of Finance, give you information that is useful in the coming days and weeks, not yesterday's news. And let me introduce everybody here. That voice you hear, Danny Stewart. You don't see him on camera, our illustrious producer, Zach. You got Hunter, Mozingo. You got Alex Matudis, as we talked about, non-Husky. Don Vandenbord, lead singer of a Kiss cover band, and me, breaking in some new jeans. And so, look, before the Fed. So I think, and it's going to be interesting to see what happens here, but I think you're going to see probably dollar break out here. And I think you're going to see more talk of tightening, and it's going to come sooner than you expect. That's my prediction. Okay, predictions. We were talking on the phone, Danny, or maybe it was last week's show, in regards to the Peter Boris and Paul Tudor. It must have been on last week's show, Paul Tudor Jones documentary, which, by the way, I found one on YouTube. I linked it to the show, and they pulled it down right away. Like, Paul Tudor Jones's group pulls down every time somebody reposts it. They get it down like that. It's
Really?
yeah, and I don't understand why. Like, I've never taken the time to find, hey, why isn't Paul Tudor Jones like the documentary about him Trader? Like, I don't know if he didn't like the editing, like if he didn't have final say in it, like. Just fascinating that every time that I've got a link now, it's on Facebook Watch that I send to people when they text me, when they ask for it. So anyway, big convictions loosely held. You know what I mean? Like big, just just because you think the dollar is going to go higher doesn't mean you bet it all on the dollar. So strong convictions loosely held. But anyway, so getting to this, has anyone ever seen this episode of The Simpsons, Monorail? It's called Marge versus the Monorail,
Season 4,
season 4,
episode
episode 12. Yeah,
I don't know.
and there's a song that goes with it. Like it's from it's based on the musical. This is what I like about shows. Like, I don't sit around watching The Simpsons, but I used to when I was younger. They're based on like things in American society. Like Monorail is based on The Music Man. The musical, The Music Man, the guy shows up, sells everybody musical instruments, but they do it off of Monorail, and they're going to get the town to buy a like Springfield needs a monorail, right? Of course, they don't need a monorail, but it's this salesman that shows up and gets them going, monorail, and then it's all this whole musical and everyone's singing. And you know what? I should just show you.
You should.
Yeah, like these.
That's good.
Yeah, you like that? So they're
Not
singing.
really.
We may have to have Zach edit that out.
Speak for yourself, Don.
So anyway, so they get going with monorail, and it's this whole thing. And if you haven't Googled, I would Google it, but and play it for you. But what will happen is they'll take this off the YouTube channel. So you got to do it yourself, okay? Our YouTube channel. They'll say we violated copyright. I realize now, all these years later, and election day made me think of this. That was Alex's protein shake alarm. It's time for him to down another protein shake. 12 eggs and some Tiger Fit. And so they're singing and dancing about monorail. And I realized after election day who the leader of this merry men, this band going to nowhere is. He's a bond salesman. And I want, if I come back in another life, I've said I want to come back as a parking space or compound interest, because like these parking spaces, ridiculous amounts you pay to park at venues, right? Or compounding interest is a beautiful thing. But no, maybe I want to come back as a bond salesperson to a township. So where I live, and I'm not against, I want to be really clear because people are going to go, are you against good schools and infrastructure? No, I'm not against good schools and infrastructure, but they passed on, and it's an off-season election, right? If you don't understand that because you're listening to another country, which, by the way, listen to us regularly, you don't understand off-season elections. So the even numbers are typically the midterms, like the bigger elections. Right. So if you're going gold, silver, bronze, to put in Olympic terms,
this would be pewter this year. Pewter.
Be pewter.
Yeah, big time.
It's keeping with the cartoon theme, Peter Schmidt. So that's actually the in-laws to Peter from Family. Different Fox show name. And so anyway, what they're doing here is they have an off-year election, and they like to stuff in off-year elections bond proposals.
Things that they want to get passed that they know the voters won't go
for. Well,
or may not go for.
May not go for because most people don't show up.
And then they put it, the wording of the question, the way they word it,
Right.
or double negatives or double, and you're not, so you think you're voting one way.
I didn't do this research, and I kind of wish I did, and I'm being serious now. How many bond proposals across America took place? Because what happens is, so the Rockwall School District out where I live needs more schools. Like people are moving to the community, and they need more schools. I'm all for that, so I'm not against this. But every year, every election season, I'm not making this up, there has been a bond proposal on the ballot. And I can only imagine who's beating down the door today. Hey, JJ, he's the superintendent of the school district, right? But it's got to get past the school board. You're going to need more schools, and like based on projections. And the bond salespeople get a cut of this. They're selling them the bonds. The bond market is how much bigger, Daniel, than the stock market?
Much, much bigger.
These are the best bonds. So if you don't understand why this is so lucrative, because these are government bonds. These are they don't default. They
well, they're not supposed to.
Yeah,
well, they were going to in 2008 till they got a bailout.
Right. They very rarely default. There's no absolutes. So they just
print the money and create inflation so they don't. Okay.
Well, that's the 2021 model or 2020 and the 2021 model. There won't be a 2008 again, right, Danny? Like the way it happened. Well, hold on.
Yeah, they'll call it 2022. Something.
And so there won't. The government bonds are some of the safest investments you can make, and so there's always going to clamoring for institutional demand for these things. And when they put it on the proposal, it'll raise your sales tax by 1/4 cent. Well, who's not up for that, Danny? It's 1/4 cent, and they're so good at this. Like the bond salespeople are the monorail of the industry. Like they come into your town, they're on an elephant, and they're dancing, and they're showing off their fancy new jeans, and they're selling these town bonds, man. I'm telling you. And I would love to know just how much in cumulative each town, like in the last 5 years or 10 years, like some kind of study, how much all those little things do add up. And are you getting the benefit? Because like when they raise your taxes, do you get better fire protection? Do you get better police protection?
Do you get better schools?
Well,
education. Do you get better education?
I'll tell you what.
That's the main thing. Is education better?
Yeah, and where I live, I believe has statistically, very good schools. And so it's interesting that so if you have children out there, right, and you're like, should I get them into the stock game or the bond game? Man, get them into the monorail game because I'm telling you, there are so many bonds every year sold. I bet you they don't even have enough sales to do it.
Well, there's 3 big major companies in Texas that rotate around. One's the advisor one time, and one's actually selling the bonds. And they act like this is an independent advisor. And then the next school district, they switch, and the one company will become the seller of the bonds, and the other one becomes the independent advisor. Because the school district always needs an independent advisor.
And then because like I think the lower on like all the interest is in like federal. Well, I shouldn't say all the interest, but as you go down the spectrum, like it's federal government, right? So you get the presidency and the Senate and like Congress, and they get a lot of news coverage. But the further down the food chain you go, and I think some of the most corrupt forms of government are your HOA association. They're just painful. And so, like, where's the like? I know it all exists because it has to exist by law. But like the auditing of where those funds went from the other bonds and how the monies are allocated. And, the further down the food chain, the people must come out of this country are like, that's your government? Yeah, welcome to it. Like that's what we do here.
Well, so in the election yesterday, there were also 8 amendments to this Texas state constitution. A couple of them were very good, but the second one was asking to vote to allow municipalities or little townships or counties or whatever to be able to develop quote underutilized, underused, or kind of blighted like areas that weren't doing well. So it's kind of giving them carte blanche, what that is in code. So it sounds good, like, oh, we're going to help this area, right? what that really is now you're giving us the freedom to go underwrite more bonds and borrow
Oh,
to push
that's
more
interesting.
stuff.
So real quick, Paul,
That was the only one I voted against.
I'm going to use this as my jumping point for what I really want to talk about here, transition. But it's interesting because Danny and I don't talk before the show purposely. Like, I don't want to know what he's thinking, unless there's something really specific this time I need you to cover. Sure. But Don and Alex and Hunter don't know. I mean, because nobody would have given me permission to do the Gene bid that I just did to get you into the tent going, wow, Tim does look great in jeans. But it's interesting because, as Danny said, carte blanche to go in there. And it sounds like a great idea, like let's redevelop these areas. But how do you redevelop it? Who gets a – because it's all in it. Like, this is
really supply and demand should have
something to do with right. And you'll get better pricing and market forces take over. I kind of see where you're going here, which then leads me to annuities. And so Danny wanted to discuss this, I think, last week or maybe the week prior, and we just never got to it. Some nonsensical topic I probably spent too much time on. Overshadowed for sure what we really want to talk about. So we have not been a fan of annuities on this show. That's no secret. We're not a fan of annuity salespeople. We're not a fan of the things that annuities represent that most people don't know about at home, such as trailing fees. So if you bought an annuity in the year 2000, there's a really good chance that salesperson is still getting paid. Now, that's a grotesque example. Tim, go prove it. You're making a generalization. Look, Danny is the Department of Generalization. He's going to make a correction. It's going to come from him. So I'm allowed to make generalizations. And if they're grotesque, Danny will slam the hammer down on that. When I make up words, Don looks them up in his memory bank of dictionary words, and he tells me if it's a word or not. When I go to the gun show, I ask Alex, how much am I curling? It's a whole thing there. So, and then, of course, Hunter is the king of parlays. And so just making up titles as we go.
Yeah. Got to fill in for everyone.
I felt bad leaving him out there.
That's right.
I'm like, come on, give him a crown. And so, oh, yes, the king of parlays. And so, which I love. I love a good parlay. Back to annuities. So we're not a fan of how they're sold using fear. We're not a fan of what they're not. They're not investments. They're insurance products, and you don't quite understand that. There's a lot of issues with annuities. And so over the years, we'd have people call up the shop, 855 Real Wealth, if you want to get a hold of us, Dan at revereasset.com. By the way, here's everybody. If you want to get a hold of us, we'd love it if you did. Look, listen, here's the thing. When you go to your strip mall advisor and you ask for strategy, and you say, tell me what strategy we're doing. Tell me where the market's at in time and space. Where's the situational awareness of the person managing my fund? So let's talk about that. You're not going to get that when you go to the strip mall. And here's why. Because the major brokerages are set up for roving reporters. I call them roving reporters. So there's one person extremely smart, and she has most notably probably traded on the floor, and she is wicked smart. And what she'll do is she'll get scheduled, and she'll have a territory like Dallas-Fort Worth or St. Louis, Missouri, or Los Angeles, California. And she'll go to the individual brokers like, hey, strip mall advisor Bob here. I've got a client who wants to discuss stocks. And they call her in to talk about stocks. And so there's a reason why when you go to your brokerage office, you typically are like the Rolling Stones and don't get no satisfaction. And so, did you like that? Mm-hmm. And then it's because you're not going to get answers with someone who's rational or operating in the markets. But when you come to Revere, when you call and talk to Don, Alex, or Hunter, or me, or Danny, you're talking to people who actually trade in the markets, actual strategists, and you can have an in-depth conversation. Might not be what you want to hear. We're not in the business of placating. We're in the business of honesty and transparency and getting results. And so that's what separates us. And so you don't really get that with annuities because the trail of what the product, and it's a product. It's not a stock. It's not an investment. It's insurance. And so there's a lot of things that come along with that. And so over the years, what would happen is people were sold a bill of goods with annuities, and the markets would go up oodles, but the annuity never went up oodles. The annuity seemed to be capped at minuscules, right?
Right.
And so oodles and minuscules, Danny, is what we're going to use here. And so you're frustrated, but you were sold it in a moment of fear that if the market went down, you would be protected. And that's true. Like if the market went to negative $1 million, you would still be held at zero, most likely. And so they use that fear to sell you this annuity. But when I say sell it to you, it comes with fees typically, like high fees. And it's not just fees one time. Because as someone will tell you from annuityworld.com, we don't work for free. That's their motto. Annuityworld.com. We ain't working for free here. And so that's what the voiceover says when you click on annuity.com. And so anyway, as they're not working for free, they're taking your potential returns. And you, by the way, you can't leave. Annuityworld.com is like the Hotel California. You can check out any time of night, but you can never leave. And if you leave, if you try to escape through the doors of annuityworld.com, not only are we going to kick you in the privates on the way out, we're going to penalize you financially. And when we penalize you financially, you're going to wish you chose the physical punishment over the financial punishment. And you're going to think it's not fair. It's my money. I should be able to check out of annuityworld.com, but I can't because you're going to penalize me. And you could, it's not like you just got there and you didn't like the smell of the room. It smells like death, because that's what annuities smell like. If you've ever smelled death or cigarettes, like 3-week-old cigarettes on a grandpa that may only have a couple weeks left. Like that's what annuityworld.com smells like menthols, except with mothballs mixed in. It's not a very good scent. And so you're trying to leave. You don't like the room. The pillows suck. And you're like, I'm going to go. But then they're going to penalize you, whether you've been there for 2 hours or 2 years, or even the worst, if you've been there for 5 years. And what you don't typically know is that thing, that product you were sold that you're so unhappy with, there's been a kicker, a salesperson kicker. Now, to put this in perspective, when you buy a home in this country, it's typically brokered by a real estate agent, right?
Mm-hmm.
Once you pay the real estate agent, and it comes out of the sale, everything's in escrow and it comes out of the sale. You don't pay the real estate agent for the next 10 years.
No trailers and perpetuity.
So that's what a trailer is. Imagine that you bought your car, and every year you sent $50 to the guy who sold to the person who sold it to. That's ludicrous. He's a rapper. And so nobody would ever think this. But when you buy an annuity, you're paying the salesperson in perpetuity often.
It's a gift that keeps on giving.
To them.
For him, yeah.
Yeah, for him or her. And so that really kind of encapsulates our position on annuities. But what happens is people call us, and Danny can sometimes get on the phone and get you out of these annuities, penalty free, especially if you've been told something that is illegal, and Danny can help you substantiate it through emails or maybe even voicemail recorded conversation. And so he's helped a number of people do this. But there's some people that Danny just can't help. Okay. So Danny, the patron saint of annuity getting outing, I'm not sure what your statue looks like, but
it's a placard.
I think
on the
Saint
wall.
Christopher is the patron saint of Saint Christopher is the patron saint of travel, I believe. People will wear a Saint Christopher medallion when they travel or they're heading overseas on a deployment per se. Danny is the patron saint of getting you out of annuities, and so Saint Annuities is what we got here. But what Danny has done, and I want to be really clear here, you can transfer into a different annuity. I want to go really slow here. We don't sell annuities.
You do a like-kind exchange.
We do not sell annuities. But for people who are trapped, and you're sending fees to a salesperson year after year, month after month, Danny can do a like-kind exchange and get you into the most advantageous situation for people in annuities. And that's different. We do not sell annuities. Like if you come to us and say, I want to buy an annuity.
If you've already got money outside that's not trapped inside an annuity, then we're not going to put you in one.
Exactly. And that kind of nuance there is why it's sometimes a little hard to tackle depending on what's happening on the news of the day. And the Fed announcement isn't out yet, so we can spend some time on this. And it's super interesting to me that so many people do call us about this particular issue. It's the same thing that if you were sold life insurance as an investment and you wonder why it doesn't match market returns, it's kind of the same thing. Or like, well, I guess
Well, you're told one thing and the cash value doesn't grow nearly what they claim.
like if you look at a long-term chart of S&Ps, I've held it this long. S&Ps are doing this.
Well, they give you an illustration. It's just not the
So can you explain what you did for a couple folks and what the construct is of that annuity and why it makes it why what you did for a few folks here recently makes it better. And look, I realize the whole point. Oftentimes, you don't realize what I'm doing, stock. We can't be the self-serving audio program where we're just hucksters on air. If you turn to your AM dial on a Saturday or Sunday morning, you will find a gazillion of these folks.
Those are all high commission, surrender penalty.
Yeah, like this isn't that. Our audio program has to have discourse. I think an echo chamber is the worst thing you could ever live in.
It's got to have real value.
And it's got to provide you with genuine educational value that you can take action on to either make yourself money or save yourself money. We talk about our losses just as much as we talk about our wins. We talk about things we learn and grow on the way because you're not born knowing everything. And that kind of transparency leads us to not be a bottom of the AM dial radio program.com that nobody's listening to. I don't even know how they sell those programs.
I do. I'll tell you about it later.
That's right. Zach came from that world.
Happy to weigh in.
Happy to weigh in on
Off
that.
the air.
Okay. No, on the air. It's better on the air. And so listen, when Danny's talking here, this isn't a setup. This isn't some ruse. There's real value here because the active trader or investor that listens to us regularly, you might not have this issue, but there's a really good chance that someone you love or someone in your circle does. And so you can have them fast forward. Now, look, I think the Gene's part of the program was awesome. Maybe have them fast forward. What minute are we
exactly? 27 minutes.
27 minutes
That's
into
right.
the show, and I was talking about jeans.
We're doing great.
Yeah. So
still talking about jeans.
Yeah.
Well, 27 minutes, still talking about jeans.
Some annuities and bonds.
So 27 minutes in, have them fast forward because what Danny's going to do here is going to really, truly help those people that are trapped in those products. And so tell me.
Well, so
before he starts, I want to just say something for 30 seconds. I did the analysis on what the person was in right now, and they passed on to us that they had instructed the person that put them in the annuities that they wanted to be conservative as they were approaching retirement. They had 98% in equities, a lot of them aggressive equity mutual funds with a ton of overlap. There was like 40 different funds altogether. It was absolutely ridiculous.
Okay.
It's important to know what your annuity, what your risk tolerance is, and what you think you're invested in.
And
so they were completely set up for a big drop.
Yeah, and well, so let's back up. So an annuity is just a life insurance contract with no death benefit. It's a wrapper. It's a wrapper. It's a type of stuff that it's a shell or a container that you're going to put some type of investment in. And supposedly it grows tax deferred. Problem is later when you take it out, it's all income first and return of principal second. So if you put $100,000 in annuity and you hold it for 30 years and now it's $200,000 or $300,000, should be a lot more, but that's how much it is. That first 100 or 200 of gains is tax, and then the very last 100,000 is return of principal. But here's the thing: the most annuities, especially the older annuities, but the annuities usually are sold with huge surrender penalties and a big commission. So the guy makes 8 or 10%. So if you put $100,000 in, he makes $8,000 right away. And then there's an 8% surrender period where it's 8% for 8 years, 7, 6, 5, 4, and it diminishes over the years because they pay that annuity salesman the day that you put the money in, the day that you bought the annuity. he gets paid right away. He doesn't earn it slowly over time. So now he's going to look for the next Patsy to sell to, and then you're done. Then he also gets little trailers, little, as he builds his book and builds it up there. Now, so the problem where we've helped is we've had a few people that had annuities for a while, and they've got some gains in them, so they didn't want to pay the tax, or they have, surrender penalties, different scenarios. But there are a new generation of annuities that have come around. Now, I still don't like them because they're still kind of cumbersome, but they're still asset protected, and there are no surrender penalties. You can put the money in one day and take it out the next if you're not happy. They're about 35 to 45 basis points, 0.45%, to have and most the commission-based annuities, those have a huge commission right away, big surrender penalties, and the cost is normally about 2.5%, 3% ongoing every year just to administer the annuity. So these annuities that I'm talking about actually have, 0.3, 0.4% ongoing fee. They have over 300 different types of funds in there, from low-cost Vanguard funds, index sector, to double long, double short. So you could actually short the market if you wanted to. You could own precious metals. You could own commodities. You can go all over the place. Most of the commission-typed annuities, and you never hear about those because the salesman doesn't make a big commission. And then he would actually have to manage the money. He'd actually have to make changes and do things depending on what the markets are doing. So the old style annuities, the one Don was talking about, is a variable annuity where you still just have a bunch of mutual funds. So you still got to figure out how you're going to protect the corpus. You got to have a sell discipline. Then they've got this newer version of the commissioned annuities where they have an indexed annuity where you get, like you were talking about, Tim, you get the return of the S&P 500, but it's capped at 10% or 8% or 12%. So in a big year, when like last year, the market was up 17, 18%, you only got that 8. But in down years, you can't lose money. So and they always show you an illustration around 8% because that's the maximum they're allowed to show, but 6 or 8% annualized. Problem is you'll make 8 or 10% capped a couple times, and then you'll make a no return a couple of years, and then you'll make somewhere in between. So when you average it all together, it's going to pay you about 3.5%, 4% ongoing. Some of those index annuities have monthly averaging. So they don't have caps, but then they have monthly averaging. So they're literally mathematically designed to pay you around 3 to 4%. But that's really not how they're portrayed or sold. So now fixed annuities are just based on an interest rate. And now with the interest rate so low, they're a terrible deal. Now, if you had an old fixed annuity from 1982 where it still has an interest rate of 8 or 10 or 12%, then you're golden. Very few of those still around today. Okay? So normally, if you've got a fixed annuity that's within the last 10 years before, after interest rates dropped, or you've got any type of commission-based variable annuity or indexed annuity, then you probably ought to revisit and see if there's a better alternative. Because there are new annuities that are very low cost, have lots of options, and they don't have any type of commissions, or they're not set up for salesmen, for brokers. They're actually set up for advisors like us, but you never hear about them because they don't pay the big commissions. So it's kind of a newer way to do it. And I still would rather have it in a regular brokerage account where I can do individual stocks and do whatever I want. Because you still can't do individual stocks. You're still having to rely on funds and get the day's ending average price, but you can go long, short, what have you.
And there's, I don't want to cover it right now, but look, there's hope for a lot of folks out there that are stuck in some there's some egregious products out there.
Oh, yes.
And what I would be really grateful.
There's some with 15-year surrender penalties. Even longer, but 15. Most of them are around 8.
If you have a loved one or someone that has an annuity, it doesn't hurt to get it looked at. 855-732-5932. you're really going to free someone from some about to say some bonds, some bondage change, because that's what this feels like. And when the market dips is when these people come out. Like that's why puts cost more. No one's fear. That's why puts cost more typically than calls. No one's fearful that the market's going to go up. Ooh, I'm scared that Tesla's going to go up.
They're worried about a big drop.
You're worried about a big drop. So market makers are a form here of just a real simple example. They mark up the price of puts because if you want protection,
cost of insurance,
it's going to cost you. And they can mark up calls. Don't get me wrong, but typically puts cost more than calls because if you think you need protection, it's been proven that you're going to pay for it. It's psychology. And so when you get a market dip or you hear someone talking about inflation, I'm quite sure there's going to be tips, inflation protected annuities. I'm quite sure those commercials are being edited right now, and you'll start seeing those roll out, and they'll get people. And I think it's dangerous. Like I affectionately, because I love my parents dearly, I affectionately make fun of my father yelling at Tucker Carlson at night. Just yelling at the TV, Tucker! Like there's a bunch of people, sometimes at night, they sit around and they watch one of the 3 major news channels. And let me placate Don here. 2 major news channels, because CNN isn't a real channel. And according to Don. And so did he smile? I can't see the guys when I No, not even a crack.
Well, I have a list of other ones that aren't real that I want to rattle off, but I'll defer for right now.
Let's not go down a political rabbit hole.
Did Billy Madison have a list? Like, who was the movie with Adam Sandler where he would check people off a list? Anyone?
I think is that Billy Madison or Happy Gilmore?
Is it Adam Sandler who had the list or a character?
I think it's like Steve Buscemi's character. Like Adam Sandler bullied him.
That's what it was. Yes.
And he called him up like, "I'm really sorry," and he's like, "No problem." And then he's
it's too multiple. Steve Buscemi went as a Steve Buscemi meme for Halloween.
How do you do, fellow kids?
Yeah. Just fantastic.
Mm-hmm.
Yeah,
really awesome.
Anyway, so you just I don't even know where I was going with this sitting there yelling. Like anyway,
two real news networks.
Oh yeah, two real news networks, right? And so listen, what are they, Tim? Tell me what you think they are. Oh, I'm not going to. It's Don's territory, not mine. I just highlight it. And so listen, if you find yourself sitting there yelling, they come out when the market dips, and you'll see some guy from MASH come out, and he'll be telling you, "Gold is the investment. Gold's been underperforming." Gold, and then there's another commercial, Daniel, where they don't get the leftover actors from MASH. Is Hawkeye still with us?
Alan Alda?
Yeah, is he still on this earth?
Yeah.
So. Harry, Colonel Potter's gone, right?
Yes.
Colonel Potter's gone. Hawkeye is still with us.
The guy that was the other commander also died.
There were 2? Oh, he took over for Potter, right?
Right.
Yeah. And then how about the guy who dressed like a girl? Jamie Farr. Is he still with us?
I think he is.
He is. Interesting. I'm quite sure they get all them on a gold.
What is this old show you only talk about?
MASH.
Oh my gosh, it was the funniest show ever.
It wasn't.
Oh, it was hysterical.
I know.
It was absolutely a classic in the 70s. That's
because you had 3 channels.
It was the highest performing show for a decade.
You only had 2 in a rainstorm. That when your choices are you being served on PBS and MASH? Yeah, I'll take MASH.
Really? Says the guy
back
that
then there were only
thinks
6 channels on the dial. Yeah, I knew it was MASH. I was playing Possum.
Oh, did not know that. Yeah. You're a really good actor. You could be on MASH.
Yeah, thanks.
Anyway, now there's a gold commercial that says, "We don't hire those expensive actors to sell you gold. We give you the savings." And I'm thinking, is that dude who played opposite of Hawkeye really that expensive? Like, was his book just filled with non-gold commercials that he had to take a day off from selling Blue Emu to come hawk some gold?
He was actually a money manager on Wall Street.
No!
Yep. He had his brokerage firm.
Man, you go down these rabbit holes and you never know who's going to come out the other side. Look at that nugget. News.
I bet he was selling. Nuggets. I bet he was selling commission annuities.
He probably was.
Full circle, nugget? Holy hell!
I don't believe
Gee,
it.
I mean, we went down the rabbit hole. We passed the rabbit. We passed Alice. We passed the Mad Hatter. We passed them all, and ending up at Danny with a
Middle Earth.
yeah,
Center of the Earth.
ending up with the wizard behind the screen of Oz going. And did you know that guy sold annuities? Oh my gosh, it's like full circle, Elton John circle of life. Sweet Jesus, this has been a great show. Let's end it to love and serve the Lord. Peace be with you.
And also with you.
Oh!
Wow.
No, we got to do the markets first.
Oh, that's right.
Yeah, you got to give
Man.
the stock nerds the red meat.
Do you think anyone just tuned out? Like, I guess they're gone. No, I guess not. So let's get with that. Let's get to Hunter. Were you done?
Yes.
Okay, let's get to
We're done, right? Yeah, great. Oh, good.
All right, man. I got something
What a
that might make
transition.
for some good discussion today.
Well, let's
You,
hear it.
will
pick
you
up the
pull up-
pace there. Jesus, hop along. Come
I was
on.
making sure you guys were paying attention and ready. Will you pull up META?
Yes,
for me,
Nita?
Tim?
Yes, NETA.
M.
Oh, Nita.
Yep.
Alternative
Meta,
meat company.
actually.
Meta. Oh, Meta World Peace.
So, the reason I brought this one up, we actually discussed this on the call this morning, myself, Don, and Alex, where I brought up that it was on the cusp of breaking out. I believe it came to the markets around July. So obviously it's made a nice move up from roughly 14 to around 1550 today. But what I thought might be interesting to the viewers is what are the holdings of this metaverse ETF? Because I don't think many people truly understand the metaverse. Not that I do either. All I really know about it is it's a virtual reality interactive universe, essentially, that you can either do things or experience things via this virtual world, more or less, or computer generated world. So with that being said, you wouldn't really think what the holdings would be. You think it might be a bunch of one-off smaller companies. Well, it's actually not. So I'm going to list off the top 10 here, and maybe this will give a little bit of insight as to why it's trading near all-time highs, which I know it doesn't have much trading history itself. But top 10 positions are NVIDIA, Microsoft, Roblox, Facebook, or a spinoff of a former Facebook company. It's platforms, Unity Software, ADSK, SEC Limited, Amazon, and then Tencent Holdings. So it's not. It's actually a pretty balanced group of companies. Obviously, there's some smaller. They have some decent semiconductor exposure in here as well. Obviously, with NVIDIA being the top holding, they have AMD in there as a holding as well. So an interesting ETF, a relatively new one to the market, but has some good big holdings. Like NVIDIA is almost 10%, Microsoft 7.5%, Roblox 6.5%. So an area of the market, just like the G5 index, that has come back to life and started to show some signs of strength, actually. Additionally, outside
what is
of
Tencent?
it's Tencent.
I always thought it was
Here is
TCHY.
in-
Chinese technology.
No, I know what it
That's,
is.
that's
It's,
the ADR.
Okay.
Tencent also trades in Hong Kong,
Right. What's the ADR?
and that's what they're
Yeah.
showing
You
there.
could just type in
TCEHY.
Tencent and
That's what I
POS
thought. I
will
had
bring
that
up
in there.
the-
It's not.
TCEHY. C before
Thank
E.
you. Thank
There
you.
you
I was getting it there.
Oh, yeah, that one is.
Thank you. Appreciate it. Sorry to interrupt. Just wanted to see it and I couldn't.
No, man. Yeah. So I just thought that was some interesting information because when I looked at it, I was like, wow, I probably don't know any of the companies that are in this ETF. And lo and behold, NVIDIA is the biggest position at 10%, Microsoft, Roblox, etc. So one area of the market that's been very strong. Another that's starting to play catch up in the environment is biotech. Will you pull up XBI, please, Tim?
Mm-hmm.
So this one has been kind of like the laggard per se relative to the G5 index, right? So in the G5, we track IWO, ARKK, QQQJ, FFTY, and PDP. So XBI is just kind of another proxy for risk on stocks or risk on appetite for demand, right? So over the last 3 or 4 days, we've seen XBI perform a little change in character, getting back above the 50-day moving average for the first time in a handful of weeks, making another run at the 200-day. So XBI starting to participate with the AAs and the QQQJs of the world, making a run, trying to see if it can get back above the 200 and have any kind of continuation. Hasn't been able to do that since it peaked in February. So XBI biotech, it's an area I talked about in a number of daily market insight videos as watching that in addition to the G5 to see if that could shape up at any point and get back above those moving averages. So, and then the last one, Tim, I know this is kind of a little bit more broad, but AB&B reports earnings here, I believe, in a couple of days, maybe on Friday or Thursday.
I'm sorry,
know it's soon.
ABB?
AB&B, Airbnb.
Oh.
But I just wanted to point out, I like the way this one has kind of based within a base here. It's been going sideways / tightening for the better part of the last 3 to 4 weeks. It does report earnings. It could lead to an explosive move one way or the other, or it could not. But I like the way the moving averages are starting to look. You got the 50 crossing up through the 200 for the first time in a while here. So Airbnb one to watch with earnings on deck, I believe due tomorrow. Yeah, looks like due 11/4. So that's all I got today, Tim.
Crazy 11/4 already. All right, Mr. Alex Katutis, what you got, bud? By the way, I bet you, Alex, if you're a Arizona stock, you're just a short hop away from either lifting weights,
Guns Katutis,
with that, lifting some weights with Alex, drinking some of that Celsius energy drink. I bet you Alex would be up for a little
drink.
Yeah, for a little Alex meetup.
I would.
Yeah, I know. You're very
accessible.
Yes. Could you speak up, Alex? I don't hear so well, and I can barely hear.
Can you hear me?
I will turn you up, Alex.
Oh, turn him up,
Go
please.
ahead.
Yeah.
Is that better?
Yeah. No.
There we go.
Give me a more.
No?
More power. No, Zach's giving me more power.
Got it. Go ahead, Alex.
Appreciate it.
All right. So I got a couple themes I want to go over. If you could pull up XRT, the real retail ETF.
Yes.
I yesterday in the tracking portfolio, I put on, or bought, I should say, Under Armour.
Yeah,
it gapped up on earnings, and this is a nice long base on the weekly. There we go. And so Under Armour and XRT are breaking out. Under Armour is a retail stock, obviously. Another name that's in that sector is Macy's, and I find it's this chart. I was watching it at $15 too, and I took my eye off of it. There was no reason not to. I mean, I don't know why I didn't buy it and get into this name. It's been a leader. It's just keeps making new highs, at least 52-week highs. Another name is Dillard's, DDS. I mean, I haven't gone to these stores. They must be doing well.
Well, they don't sell. They don't sell dumbbells and bench presses and treadmills.
Yeah, so. They don't sell dumbbells or protein shakes.
Now, Under Armour's ticker UA.
Hold on a minute. Under Armour, mine. I hold on. I'm wrong. Under Armour.
Yeah. Under Armour is UA and Macy's is M.
M. Yeah, M.
Yeah.
Mm-hmm.
Just want to give the tickers for everybody.
That M.
Yeah.
For the audio.
I do not own Dillard's or Macy's, but they are on a watch list. But in the tracking portfolio, I do have Under Armour.
Interesting.
Okay,
I'm sorry.
Another theme that I'm watching, I talked about this last week, is that home builders and the real estate stocks. Toll Brothers, I can't say enough how the fundamentals on this name, TOL, is this thing could break out. You got a 7-month base. That looks like a cup and handle to me if I've ever seen one. I'm sure the guys would agree. If it gets above that, I mean, I do own this in the tracking portfolio. I tend to get in a little bit earlier, but I can add more if it does break above that like 62 area. Now, if it comes back down I have like a 4.5% stop loss on it on the position right now based on the weight. I have a 4% weight. When I say that, it means, let's say you had $100,000. 4% would be a $4,000 position. Now, it doesn't sound like a lot, but over time, if you compound profits, 10, 20% gains on those, your equity curve is going to go up slowly over time, and that's how you make progress in the markets. really quick on the bonus stocks that I go over every week. If you could pull up, let's pull up a firm. I've been talking about this every week, and there's a reason. I think this is my biggest holding in the tracking portfolio. I went through their website last night actually, because when I build conviction around a name, I really want to know everything I can about the company. So on those down days, you're not going to be so quick to sell. If you don't understand a company, you're probably going to get shaken out. Everyone's like saying, "Oh, it's just another credit card company." It's not. So they don't charge fees. So let's say you had I don't want to pick on anybody, but United Airlines credit card. Okay. Every year, January comes around, you're going to get an $85 annual fee, and then you have the interest rates at 16%. Well, with a firm, let's say you want to buy a couch, if it's in with a 3-month loan period that they offer, it's a 0% interest rate. And then at 6 months, I think they raise it up to like a 1.8%. I have to look at the numbers exactly. And then if it's a 12-month agreement, it's a little bit more. So that's where they do make their money. And also, they make a lot of their money on the merchant contracts, because let's say they sign with Walmart or Amazon, they get a big they offer them a ton of business by doing that, so people aren't pressured. Oh man, I can't afford that TV for $1,200. But we offer this for 6 months. You can just pay a small $250 a month payment. Okay, I'll buy the TV, and now both of them benefit because of that. So I think that this business model and this idea of this buy now, pay later is going to be a big wave, and we're obviously seeing that in the stock price.
So let me ask you. So a firm actually gets a little, very small piece of the sale from Walmart. In other words, because they're helping finance, like a credit card company charges.
Not that. Okay, so let's say someone bought a TV. Walmart obviously gets that $1,200. Where a firm profits is the contract that they originally had with Walmart, and if they go over the 3-month loan period, if they don't pay within 3 months, then they start to get a little bit of an interest too off that. But unlike a credit card, there's no late fees. They don't charge late fees. You're like, okay, well then why would anybody ever pay? It does go against your credit. So if you don't pay them, eventually you're gonna get dinged on your credit score. So there is they do have leverage there against the consumer from not paying.
Okay. What else you got, buddy?
That's it. I just want to really just kind of pound the table on if you have a leading stock and it's working for you, try to learn as much as you can about that company and read up on it.
Okay. Tell you what, let's go to Don, and then Don, you want to tell him about the conference you're going to and anything you want to glean from it, or you want to save it for when you get back next week?
I'll mention who it is, but I'll give the details when I get back next week. Martin Armstrong. He has kind of a cult following. You can. I'm just going to leave it there. With
Okay.
he's an interesting gentleman who has made some uncanny forecasts based on an artificial intelligence computer called Socrates that has been programmed over the years that looks at all markets across the globe and looks for repeatable patterns. And I've been going to this for about 6 years now, and I've seen him predict, and it's not just about stocks, it's about the economy, it's about society. Some things that that I just shook my head about have come true over the past 6 years, and it's just an interesting time. I made some great friends there who have been going to these for 20 plus years. He was actually incarcerated and held in contempt because he wouldn't turn over his source code to the federal government, which is a whole interesting story by itself. But he was incarcerated for a long time, and he deals in the upper echelons of governments and central banks. They're always calling and looking for his opinion. He's got an amazing blog. So for me leaving it there, I kind of added quite a bit to it. But anyway, I'll report on it when I get back. I've never come back with anything that didn't open my eyes to some certain things either going on in the world financially, politically, or on a socioeconomic basis.
So you have the video tonight. You're going to be doing 21 over 21 or?
Nope. Hunter will update that on Friday.
Okay.
And I want to follow up on, from a market standpoint, on what Alex mentioned about how important it is to research the companies. William O'Neill is very fond of saying it's not the chart that makes a stock double or triple, it's the story behind the chart. So you could look at two identical charts, one breaks out, goes basically nowhere, another one breaks out and runs up 20% in a week. There's probably something different between the stories in the two companies, and learning as much as you can about companies is important. And he made a couple of good points about a firm. Let's talk about who's paying the price for the advances of a firm. Bring up the chart of Visa. Not a good chart there. Notice it going down as a firm goes up. They are taking a lot of the business away from the credit card companies. Same thing with MasterCard. Bring up MA. It's financial engineering that is opening up to an entire new wave of people that are tired of paying 18% credit card fees on a monthly basis if they don't pay their balance off. PayPal
also
too.
got
I think it's come at the expense
Yeah.
of them. Yeah, look up PayPal. Money's flowing around fintech, and it's flowing into a firm from Visa, MasterCard, and PayPal.
It's interesting because PayPal offers the same service. It's just not trendy. It's not. It's almost like
PayPal. People got a sour. Wall Street got a sour taste in its mouth from PayPal looking to, when they were talking about buying Pinterest.
Oh yeah,
that's often a sign of companies that are getting desperate for growth when they go into a completely new line of business, and it's usually not a good reflection on the company. And they've continued to make lower lows there. So we got out of payroll.
Yeah, it often ends badly when they do that.
Yeah, we got out of PayPal when it broke our technical levels.
All right,
it's that simple. Doesn't matter the story or how attached you are to the company.
Is that what you got, Dan?
Yeah,
Hey,
Hunter will do the 21 list on Friday.
Okay, awesome. What you got, Alex?
Mm-hmm.
Yeah, sorry, I actually forgot one thing. If it's only going to take like a minute. If you could pull up Zillow real quick.
Oh, just hold it for a second. I'm gonna circle back. Can you hold it for a second?
Yeah, absolutely.
I'm gonna come back to you in the outro.
Yeah.
I think this is where you're going. Let's do this, Daniel. Take us home. Then I'm gonna come back now with one last things.
One last things?
Yes.
One of your own and then one that Alex just fed you?
I'm going to do a teamwork with Alex.
That's right.
No, I had
There
it
we
before
go.
Alex. So I'm going to do
I think
two
Tim was reading my mind.
one last things.
That is a scary, scary thought. You guys are reading each other's mind. Wow. That's a
Didn't you
dark
see me,
place to be.
Didn't you see me in these jeans? Did we talk about the jeans?
He's already working out.
I
He's
feel like we
working
talked
out.
about the jeans. I thought we talked about this.
Okay. All right, folks. Listen, if you like what you heard, please tell a friend, tell a neighbor. Just send them to revereasset.com, and they can sign up for our newsletter that comes out every night that the market's open, short 10-minute market video newsletter. That's the red meat for the stock nerds and anybody interested in learning about the markets. Then this podcast, which is normally done on Friday, but today we did it early Wednesday morning before the Fed announcement. But normally it comes out on Friday. And we won't spam you. We won't reach out to them in any way. It's up to them to reach out to us. But if they want a complimentary portfolio review or just have questions about a stock, or they want a topic they want discussed on the radio, you can just send us an email, dan@revereasset.com, Don at Revere Asset, Tim, Alex, or Hunter at Revere Asset. And you could always call us old school at 855-REAL-WEALTH.
And look, Danny takes the calls all weekend. And so if you listen to this, like you're used to listening to this on the weekend, and you know someone who has an annuity or you have an annuity yourself, you're like, I really want to ask Danny a question, just call. Just call. I'm telling you, Danny will take your call over the weekend. He knows that when you're available, and it's the weekends typically, you give him a holler. So listen, a couple things. I'm going to do the thing with Alex here first because I think this is where he was going. And Don set it up. You literally just mentioned it, like when you see a company going after, something like I literally have the note here: stick to your knitting.
Yes.
And I wrote this super early this morning or yesterday. And here's Zillow. And if this is where you're going, Alex, Zillow was buying up homes. They're taking a huge write down. Zillow is a real estate data company.
Right.
Looking for more growth. They started buying more homes, and it got me interested. Like, okay, so Redfin, RDFN, kind of does the same thing. And did they report, Alex? Redfin,
I
no, tomorrow.
don't know off the top of my
Tomorrow
head.
is Redfin's reporting, or Day of Reckoning. But it's interesting. It's interesting what Zillow. I mean, Zillow got their butt handed to them. Like the amount of loss. And is this where you were going, Alex? And do you have the amount of
Hey,
loss?
I have some really good stats though.
Yeah, that's what I
on
was
what's
hoping
going
you had.
on.
Go ahead.
Yep. So last month, September, was actually a record low for inventory, which is actually really good for the real estate market. So what's happening was, I think it was actually a company-wide problem where they weren't buying the homes right and they weren't selling right. So it's an individual problem. That's why they're laying off 25% of their workforce with their it's called their iBuy company. They're getting rid of
Internet buy.
their internet buy. There it is. So this is what I think. So pull up BlackRock, BLK. This is just a theory, but I believe that companies like this, big investment companies, they are winning. They buy entire neighborhoods, they buy hundreds, thousands of homes, and they're crushing it. And Zillow was too late to the game because BlackRock had been doing this way before they even got into the mortgage business, actually buying and selling homes, not just being a data company. So I think that they couldn't fight these big dogs, and they're going to keep winning. BlackRock, and it's just look at the price action. This just tells the story that Zillow couldn't compete with them. It's not. I don't think it's a real estate problem. Just based on the inventory levels still being low and people buying homes and prices are rising. So, and with inflation, that's a whole other subject. Yeah,
It's an
I
execution
just
problem.
think it was
Yes.
exactly.
Look
It's
at
a
when you
company
CG.
problem.
I'm sorry.
Look at CG, Tim. It's a private equity company that's heavily, pretty much only real estate.
Yeah,
I mean,
there we go.
look at their chart versus Zillow. Just gapped up and broke out versus Zillow. Crap
When
in the
you're
bed.
told you're going to make this is I view it as an execution problem, meaning that they had a big pit of money, and they were told to go spend it. Whereas I believe BlackRock and Carlyle Group, and they have
Analyze where to spend it.
They have more discipline in their buying. I think this was an execution problem, and it's no different than like if a venture capital firm comes in and just like they've got all this money, got to go spend it, and they just
Well, they were on the real estate valuation, the internet, the data, and the valuation, and then they saw these other companies that were actually in the real estate transaction business, buying and selling, making lots of money, and they decided, hey, we want to get in on that, and that really wasn't their bread and butter, their knitting, if you will.
Yeah.
And so they tried to jump in, and
and someone would say, well, why? Like, why would you do it? So it's not adding, like when you say adding a vertical. So someone out there might be thinking this. Well, Tim, Netflix went from shipping discs to streaming. Isn't really that similar to what Zillow's doing? I could see Zillow doing mortgages, but they got into the buying the business of
flipping
buying
homes.
and selling homes.
Yeah.
I'm pretty sure it's not as
very competitive.
Yeah. Whereas I think mortgages might be an easier vertical than what they just did.
Yep.
They would have been better just taking a bunch of that cash and paying out a dividend to the investors,
buying back their stock.
Yeah, because then they would.
What was the size of the write-off, Alex? 380 million.
Oh man,
it's something.
It was a lot.
It's for a quarter, for a 1 quarter. It's tremendous.
It's just
anyway. I don't know. We don't need to slow down. So anyway, the real one last thing. That was the alternative. So we ever read one of those Encyclopedia Brown books where you could go to different alternative endings? For this ending, go here. Like you could switch to different pages. I loved those books as a kid. This is the alternate. This is the alternate ending.
Choose your own adventure.
Oh, I love those.
Oh, the best.
Encyclopedia Brown was the best. Awesome. Yeah. So here's the interesting thing. I want to show you the VIX. There's usually a trade you can do like VIX above 15. But I don't want to highlight that. I want to show you today what the VIX is doing. It's the daily chart of the VIX, right? You expect the VIX to have this ugly, ugly chart. Oh, I'd like to show you an ugly. That is an ugly chart, right, Danny?
Mhm.
Right. But it's up. It's up 0.69% today. Yeah, I mean, it's not nothing special. It's a Fed day. By the way, on Fed days, those first 10 minutes, man, typically they're like the bull's moment of glory, right? And then after like 110 central, the market kind of will fade a little bit. But it's been different acting because Jay Powell comes out and talks. And you're going to talk today at 1:30 Central, and it'll be really, like I said earlier.
And you got to be ready
I think the dollar will
to
spike.
take action either way.
Yeah, and it's really hard.
It could go either way.
And you don't want to get shaken out. Like it's that first 10, 11 minutes is just
first couple minute move is normally wrong.
It's glorious to watch. And so anyway, so this is the VIX. And then here's the product where came the famous cheer UVXY. You ain't getting no alibi, you ugly. UVXY. Here we go. Oops, UVXY. I can't type that. Down down 1.29%. And I highlight this because most people that will partake in this product is a triple leveraged VIX. It's not based on this. The VIX is a retail product. Okay, it meant it's not typically traded by institutional investors. So the VIX, the people's VIX, the cash VIX, that I do that to highlight that it's not on the inside, right? It's on the outside. But just like you and I aren't on the inside, we're not Goldman Sachs that has tomorrow's prices today. They always seem to know what's going to happen, don't they? I wonder how that works. Higher echelons of government pandering. So here's the VIX, 0.62%. UVXY down 1.3%. And then it's because the UVXY is down because it's based on the VIX futures. The VIX futures, now that's the institutional quality product that people are taking that are on the inside, and that's down almost 0.3%. I highlight that not because I'm pointing out anything particular, but a lot of people will endeavor into UVXY expecting the market's going to get volatile. Jay Powell's going to speak, and look at what it's doing right here. The VIX is up. UVXY should be up. No, au contraire, my friend. The VIX futures are what you need to track. And with that,
we'll talk to you next week on Your Money.